that Senator Smith is next. The floor is yours.
Thank you. Thank you. Thank you very much, Mr. Chair. So, not so long ago, I think you could safely describe most individual investors in digital asset markets as enthusiasts, but that has changed a lot over the last few years as digital assets have become more mainstream. And I think the topic of this conversation today, looking at what sort of a regulatory framework we need for digital assets, is very important.
Jamie.
And it's important that we don't provide just a stamp of legitimacy over this sector, but we are actually providing the kind of consumer protections that people need. Investors should be protected from fraud, from misleading information, from self-dealing, and from conflicts of interest by those that purport to be representing them. They should be protected from unfair and rigged markets. And those protections are going to be good for investors, but they're also going to be good for the market. So, Mr. Massad, I want to get at some of the what this proposed market structure legislation should look at, and we have kind of as our the legislation that's out there, the Clarity Act. So I'm going to just try to get at some of the issues in the Clarity Act. So as I understand it, the Clarity Act would prevent any digital asset from being regulated if it is represented as a collectible, or as art, or as something that has inherent value or utility or significance beyond its mere existence as a digital asset. Do I have that right?
Yes, you do.
Okay, so that seems like a pretty big loophole to me, and I want to just dive into this a little bit. So if a cryptocurrency, for example, was launched by a social media influencer, could that, in your view, have some inherent value and therefore be exempted? What about, let's say, a meme coin that might get you invited to dinner with the president? Would that have potential inherent value?
Yes.
Tesla is worth more than several of the world's largest automakers. If it were to issue a crypto stock token, would that have inherent value?
Well, that certainly would. That would be also exempted as a security. So that should be still regulated as a security.
As a security, right, which is sort of the underlying challenge, as you pointed out a moment ago. So I mean, can you imagine a crypto asset that wouldn't have some inherent value?
Well, this is the problem. It's unclear exactly what would be categorized as digital commodities under this definition. A lot of people say it would be these native tokens like Bitcoin. I would think about it this way. Most trading today occurs through centralized intermediaries. It does not occur through these decentralized exchanges. Those centralized intermediaries list several hundred tokens. The question is, how many of those would be regulated by this? And I think it would only be a handful, and that's a real problem.
Well, exactly. This seems to me like a loophole that you could drive a truck through.
Yes.
And I don't think that that is an accident as this legislation has been developed. Let me touch on another issue. I think we've heard it today. Crypto industry and its promoters are sort of branding digital assets as something new, as innovative, as revolutionary, and therefore they need some sort of new or bespoke regulatory framework because the established rules for protecting investors and guaranteeing the freeness and fairness of markets don't apply. And I'm not arguing that there aren't some specific things that we need to address because of the nature of these assets. But here's an example of this. Under the Clarity Act, it would allow a crypto company to raise up to, I think it's $300 million from retail investors over 4 years, as long as they would be exempted from complying with SEC registration and disclosure rules, up to, even if they're raising up to $300 million in from retail investors. Is that, do I have that right?
Yes, there's a new exemption for capital raising for building what's called a mature blockchain system.
That's right.
It does require some disclosure, but it's otherwise an exemption from
SEC
from registration.
So if a regular company was required, would be required to disclose to the SEC how they're spending the money that they raise.
Yes, I mean the challenge, the problem with that exemption is you don't actually have to build the mature blockchain system. You just have to have the intent to do it.
You just have to have the intent to do it, but you could use that money for, I mean, what would stop you from using it to buy a house in, the Virgin Islands?
Well, conceivably there could be a lawsuit against you for misleading information. But, you know, if you had
That's
a
sort of like an
reasonable.
after the fact.
Yeah, that's after the fact.
Right, right, exactly. Well, so this is, and I know I'm out of time here. I just want to close by saying this is my concern, is that it's not really a new regulatory regime at all. It actually is sort of continuing the status quo that has landed us in some pretty significant
Well,
problems.
I think I think the problem with the act is it's undermining the existing
Correct.
regime. We do need to customize some rules.
Yes.
But this isn't a good way to do it.
Thank you very much.